Bitcoin ETF Mania Exit Liquidity and Copa Claim Grey Swan 2024. This market outlook has been released in Italian version on 18th of January, in Spanish version on 23rd of January, and today in English version. US exchange trade funds spot Bitcoin could be an exit liquidity for several institutional players. And what is an exit liquidity? All private investment funds that in the previous years have bought Bitcoin in their own name and on their own account for speculative goals need a very large and liquid market to be able to sell their assets, or else Bitcoin, and achieve huge profits. The much advertised US Bitcoin ETFs probably may serve just this purpose, that is, allowing the first one to sell to all those individuals who enter the market driven by FOMO, thanks obviously to a massive advertising campaign. In other words, many investment funds need retail investors to sell them their assets and make profit. It's not about creating any wealth, while it's a shameless transfer of wealth. Let me explain you the entire story thanks to this simple schematic chart, which represents a typical market trend divided into 12 phases or steps. During a bear market or a choppy market, phase number 1 or phase number 2, some institutional investors like hedge funds, private equity firms, and family offices enter into the market massively. Then a bullish breakout suddenly happens and prices begin to rise. Phase number 3 or phase number 4. Imagine the entire story for Bitcoin. Then other smart investors like high net worth individual person also do the same. Phase number 4 and phase number 5. When prices have grown a lot, then mass media begin to talk about it. This produces the huge coming of retail investors like bees to honey. Phase number 6 or phase number 7. In few words, retail investors, we can call them dumb money, buy from smart and institutional investors who enter in the market during phase number 2 or phase number 3. It's essential that there is a huge amount of naive investors like Homer Simpson or Stevie Griffin to be able to carry out this phase. In the meantime, mass media go on talk about the great investment opportunity that there is at the moment. When smart money has sold all its long positions and has taken profit, this is called also distribution phase, then prices first begin to remain stable and then slowly fall down as the large capitals have left the market. Because there is no more increase of prices, then a lot of retail investors start to sell due to fear, and this produces a bearish breakout, which generates a massive sale by the latest who enter in the market due to panic selling. Phase number 9, phase number 10, or phase number 11. To conclude, smart money bought in phase number 2 or phase number 3 and sold out and take profit during phase number 6 or 7, while dumb money bought in phase number 5 or 6 and sold out in stop loss during phase number 9 or phase number 10. So this is an exit liquidity for smart money and a bloodbath for dumb money instead. Going ahead. Which are the tracks? Which are the possible evidence? First, mass media has made crazy advertising. Second, departure of well-known core influencers for Bitcoin. Third, warning from SEC, Security of Exchange Commission. Number one, promotional campaigns are intensifying. Don't forget that ETFs collect risk capital from retail investors, the money, and instead purchase Bitcoin from whales, smart money, through OTC operation or through OTC trades. Propaganda and massive advertising are essential to implement an exit liquidity, as we have explained. Number two, MicroStrategy's Sailor founder sold shares for, or has the intention to sell MicroStrategy shares for 400,000 shares. It's a lot of money, more or less 200 millions worth of MicroStrategy shares. For which rational reason does the most famous Bitcoin influencer in the world sell the shares of the largest BTC treasury in the world a few months before the fourth halving of Bitcoin and after the famous ETFs have been approved? This exit does not make sense. Number three, and this is the warning by Gary Gensler, CEC chairman. While we have approved the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. Even this statement does not make sense with the entire storytelling. Some large companies don't allow investing in new ETFs or allow it with several restrictions, even if they are famous and prestigious ETFs issued worldwide. This seems rather strange. Also, this statement, this feedback does not make sense with the entire story. More than 7 months of suffocating propaganda on the arrival, on the coming of ETFs on Bitcoin, and the final result was a sensational fiasco. Money is going into cheaper Bitcoin funds. And why we can say that Bitcoin ETF mania is up to date a fiasco? Up to now, we have only witnessed a migration of capital between pre-existing funds investing in BTC with a very high TER, or else total expense ratio like Grayscale, and the new ones ETFs just approved, which are very competitive, like the one of iShares. In other words, no new capital appears to have arrived in respect of all asset under management already invested previously. This exhibit can explain easily all the entire story again. There is only a swap between expensive ETF and cheap ETF due to their more attractive. For instance, we can have a look at the TER of Grayscale Bitcoin ETF, and all the other then are really cheaper. 1.5 against 0.5, 0.3 or 0.18. Thanks to this simple schematic tracker, we can understand easily the fiasco of all the propaganda on ETF, on BTC spot in USA. For instance, before total asset under management, before ex-ante ETFs approval, were more or less 31 billion of USA dollars, including Grayscale and the ProShare Bitcoin strategy, which are pre-existing funds, ex-ante ETFs approval. Then, up to date, total asset under management ex-post ETFs approval, we can see figures for 29 billions of USA dollars, and considering that the AU asset under management for new approved ETFs are up to date more or less 5.8 billion of USA dollars. In other words, more than 8 billions left the market through redemptions and profit taking, and almost new 6 billions enter thanks to new US BTC ETFs. Therefore, the balance is negative. In fact, negative net flows is more than 2 billions, obviously up to date. Main question to ask. In addition to exit liquidity, there are other elements that could worry institutional investors. For instance, are there any exogenous risk on the horizon? Absolutely yes. For instance, Craig Wright is set to appear in UK court for the Copa claim, for the Copa Wright trial. And what is Copa versus Craig Wright claim? It's a complex legal action involving 4 interconnected claims that concern the intellectual property IP on Bitcoin. Who is Craig Wright? A famous Australian computer scientist and businessman. He has publicly claimed to be one of the 3 key men of the team that created Bitcoin with the pseudonym of Satoshi Nakamoto. Several media and Bitcoin community too affirm this matter is completely false without no concrete evidences. What is Copa instead? It's a no-profit consortium of tech giants and USA crypto company, famous worldwide, led by Jack Dorsey, former Twitter founder. Copa sued Wright in order to defend themselves from his claims for use of Bitcoin's intellectual property, and Copa stands for Crypto Open Patent Alliance. This is a screenshot from their website, and you can see which are the main members, the founder members. For instance, you can see MicroStrategy, Meta, The Block, Kraken, and many others too. Copa versus Wright. This is a very critical issue for the future of Bitcoin, something that the entire crypto world has never seen up to date. To understand the entire story by a legal point of view, we need to investigate the 4 claims, the 4 trials. The first one, the Copa claim, or else Copa versus Wright legal action, known as identity issue, it will begin on the 5th of February. The second one is Wright against Coinbase, a legal action on passing off an ownership of the goodwill of white paper of Bitcoin. The third one, Wright against Kraken, legal action on passing off an ownership of the goodwill for white paper of Bitcoin. And the last one, the fourth, Wright against a pool of BTC Core developer, is also known the entire legal action with the definition of BTC Core claim. in order to prevent the operation of two parallel blockchains network, the BTC network and the Bitcoin Cash network. Now, if Copa were to lose and therefore the English High Court were to assign the copyright of white paper to write, then the consequences for BTC could be catastrophic. This type of exogenous risk is expressly mentioned in the registration statement of some new ETFs recently approved. Is your crypto portfolio ready to face this gray swan? Look at this. Give a look at what is clearly mentioned, extracting this text from the registration statement at point number 45 of ETFs iShares Bitcoin Trust, or as BlackRock. As you can see, it's mentioned loss of public confidence. Bitcoin could face obstacles and also could lead to a decrease in the value of Bitcoin. To summarize the entire story, iShares or else BlackRock reports clearly in the official documentation submitted to SEC by which its ETF has been recently approved. First, the claim is a serious issue. Second, there is a risk of fundamental changes into the source code, and this will affect probably the entire mining industry. Third, there is a risk of changes into basic principle, potential loss of public confidence in BTC network, potential reduction to adoption due to the verdict, and risk of decrease in the value of Bitcoin. Copa's legal strategy is enough simple to sue right in order to demonstrate that he is not Nakamoto, and so all the others pending legal actions initiated by Wright, number 2, number 3, and number 4, against some member of Copa will lapse on their own. And now ask yourself, what happens if Copa doesn't win? Instead, Bitcoin rebranding risk. This is an objective risk that will affect BTC if Copa were to lose the claim because the High Court recognizes the copyright of Bitcoin white paper to write. In other words, this would force the name of Bitcoin to be changed to a very different one, such as Bitcore or Corecoin or something like that, to avoid copyright infringement. The consequences in terms of global trust and confidence for BTC would be devastating, and not only in financial terms, by a point of view of financial terms. Copa claim is a serious legal issue for BTC. This explains the reason why the entire claim is structured on 3 different levels of procedural subsidiarity. The first one, lawyers of Copa must demonstrate that Craig Wright is not the author of the white paper. Point number 2, even the first point was admitted and granted, Craig Wright is not the owner of the copyright of the white paper. Number 3, even the second point was admitted and granted, any use by Copa of the white paper will not infringe any copyright of intellectual property to Craig Wright. Warning: there is a wrong media perception about this legal issue. In fact, during the next Copa claim hearings, it will emerge that the creation of Bitcoin was not the work of a single person, but rather a team effort with 3 people at the forefront, respectively Harold Finney, unfortunately deceased, David Kleiman, unfortunately deceased, and Craig Wright. Of the three, it was Wright who registered the copyright of Bitcoin white paper in 2019 at the US Copyright Office. This is the roadmap, the timeline for the trial. As you can see, it begins in the next days, at the beginning of February, and we can see many different examination, different hearings, and different calls for forensic expertise. Last but not least, for England, this issue can generate a huge competitive advantage compared with other nations or other worldwide nations. In fact, London can become the best place in the world to register any innovation for the digital economy, thanks to strong protection on intellectual property. In the coming weeks, the eyes of the world will be focused on this matter to understand its possible consequences in advance. New updates will be published in the next days according to the roadmap of the entire court case in Twitter and in YouTube.